Hello, everyone, and welcome to another Wall Street for Main Street podcast. Today we have a new guest. He's probably no stranger to a lot of you, though. It's Martin Armstrong of Armstrong Economics. Just in case, for those who don't know, his first time he became famous was predicting the '87 stock market crash. He also predicted the top of the Nikkei in 1989 and the Japan currency or the Russian currency crisis in '89. And one thing he just told me about the '87 stock market crash is when that happened, he also said we're going to go higher. Am I correct?
Yeah, that's pretty much why all the brokerage houses called us out and giving lectures all over the world to explain what it was all about.
Okay. So my first topic I want to get into is you have a movie about your life. It's called The Forecaster. What is your favorite? How is it being received? I heard it's very popular in Europe and all over the world.
Yeah, it's finally actually going to show, I think, starting around March 27th in Los Angeles and New York, I think around April 3rd or so. I mean, it looked for the longest time it wasn't going to be shown in the United States at all because it's kind of controversial as far as the bankers and things of that nature are concerned. But outside the United States, I mean, everybody knows what really has taken place, and so it's been extremely popular everywhere. I mean, at the first debut in Amsterdam, there's someone from the Moscow Times who flew in, and they initially were very skeptical. And I said, "Look, don't ask me any questions about it until you see the film." And when he saw it, he goes, "Oh my God, this got to be shown in Russia right away." So I mean, it's been really well received everywhere. It's been showing in Croatia and Greece. I mean, it's amazing, and it's been sold out everywhere they go.
What was it like to this popularity? Did it surprise you at all, or was it expected, or what?
Well, you have to realize this is a documentary, so they've been following me around since 2011. So it was kind of like 3 years in the filming and making. And you kind of become kind of complacent with it. You're not really, okay. They must have filmed, I don't know, probably at more than 1,000 hours. And so you don't know what's going to be in the film or what's not, because, I mean, it's funded by, European interests over there. So you have TV stations and everybody is lined up funding it. So, I mean, it's an independent film, so I don't necessarily always know at the end of the day how it's going to come out. But I knew what the gist of it was, and that was, as long as it was going to explain what really is happening in the global economy, then I was willing to do it. So it's not like a poor me type thing. So it's really just kind of showing really how things work behind the curtain.
And one other question about the movie is Americans can now see it, correct?
It's going to be shown in L.A. and New York. After that, I don't really know what I guess, they'll be doing I think they have distributors signed up for it right now. I don't really stay actually in touch with them all the time.
Okay. All right, first thing I want to get into, though, is what gave you this, what made you forecast a lot of these things with, I would say, strong accuracy. I can't say I don't know for sure if everything came to fruition. I just don't know. But,
largely, I would explain this, is that we were, the reason we became like with, the institutional and the highest paid and all this sort of stuff was you have to realize that when we're beginning these things was in really the late 1970s. And we would deliver reports by telex. So we would do 3 reports on each market per day. So for someone to actually access us back then, I mean, there was probably $250,000 a year in communication costs, besides what you paid us. So honestly, it could only really be for major institutions. And so we were well known at those kind of levels. So like when I think things started, becoming a little bit more public, was like in 85. I was asked, about they were, wanted experts because they were really going to create the G5 at that point. And what you then begin to realize about politics is that it's really just a dog and pony show. They call up people and want to pretend that they're calling up, experts, but they already have a conclusion what they intend to do. So I kind of didn't particularly like that attitude, and I wrote a letter to the Reagan White House, and I said, "You guys are out of your mind. You think you can just lower the value of the dollar by 40% to help trade? You're going to cause a panic within 2 years." So I wrote that off to the White House, and White House, because they know that I was very influential, so to speak, in the institutional side. So I got a 2-page letter back. They always would have to respond to me. So it was just an interesting thing. And then when the 87 crash came, it kind of put government in the position of a tough, really behind the 8 ball, because here I had sent a letter to the White House, which was kind of public at that point, saying you're going to cause a crash in 2 years. And that's basically, I was then kind of like drafted into this 87 thing, and I really didn't want to get involved after my experiences with them. That it's just, like I said, just a dog and pony show. But we ended up with 3 clients on the commission, and they drug us in, and a friend of mine, Jack Swegger at the time, called me and says, "Marty, you got to do this because they're going to come take all our computers away." So I guess my biggest accomplishment with that, if you read the Brady report at the end, it more or less didn't really do anything to the marketplace because the market wasn't responsible. It was really government. And so at the end it says, well, they didn't want to point a finger. They just said, well, we think that foreign exchange had something to do with it. And the government will never accept blame. All right. But, it's just honestly brain dead. I mean, you sold the Japanese at the time, Rockefeller Center and everything, but they had, more than 33% of the total U.S. national debt. Now you're going to tell them you're going to devalue it by 40%. You don't expect them to sell? And so the 87 crash was caused totally by government. And that's why at the low we said, okay, fine. Hey, listen, this is going to make a new high. Sorry, here we go. And, well, everybody's just looking at price action, and they don't understand what's happening. This is a global economy. And the same thing's been developing recently. With the euro going down, it sends capital flows in this direction. So you have real estate going crazy in New York, Florida, California. The Chinese have been buying real estate. Why is this happening? All right, because everybody's trying to run away from someplace else. And although you have a lot of people very bearish the dollar and the United States, and that's all they ever focus on. We might not be the prettiest one, but we're the best looking one of the three ugly sisters. That's what can I say? Europe is really, really bad. And so, money's just been trying to get away from everywhere it can.
Yeah, that's a great point you brought up about the flight capital. You see Chinese, they're buying up real estate in New York, California. You see a lot coming from Europe. So all I see is a huge amount of flight capital running away from somewhere.
Absolutely. If you look at the stock market today, retail participation in the United States is at virtual historic lows. So this is not a bubble. You got all these people mouthing, "Oh, market's way overvalued," but they're not even looking at anything outside the United States.
Yeah.
And that's the problem.
Well, you said that last time I read, I could be wrong, so correct me if I am wrong, that Dow 32,000. Am I correct?
We have basically three numbers. First, we've said there's this 18.5 area, which is formidable resistance, okay, which we haven't gotten through. We're crawling along it. Then the next level is about 23. That's where a normal high would form. Then what you have is the problem of what we would call a phase transition. And that is kind of like the bubble you saw in 1929 or Tokyo going into 89 or the dot-com bubble. All right, how do you get that? And you get that with capital concentration, and it comes in largely internationally. And now we're seeing the flows internationally, but we're not seeing the domestic people buying into it yet. So there's a possibility of the Dow going up to, the mid-30, even the 40,000 level. Probably that would occur if it's going to around 2017. All right, so what would cause that? It would basically be more or less the capitulation of the euro falling below 80 cents. That's it. You have the potential for all kinds of crazy stuff in Asia. You have Russia, keep flexing its muscles. If you look at World War I, World War II, etc., it's a capital inflow because of that. Capital always tries to run away from wherever a geopolitical event is. But then we have a sovereign debt crisis that's really monumental. In Germany, you have more than 50% of municipalities bankrupt. You have the government talking about putting in a 15% surcharge to bail out the municipals. You have, the first real banking collapse in Austria. That's exactly where it began for the Great Depression. Same place. And the U.S. banks are not in a serious position right now, but the Europeans are absolutely devastated. It's hard for people to quite grasp how bad the European banking system is, but it's largely being held together with chewing gum and Scotch tape at this point.
Like the U.S. power grid in some places.
They came, the European Commission came to us initially and told them, look, if you're going to do it this way, the euro is going to collapse. You cannot, it's never going to even come close to getting, matching the dollar. And they understood that. And the reason I said that and published it, it's on, 1996, so I'm not making up stuff here, but is quite frankly, the problem with Europe is that they did not consolidate the debt. If you didn't consolidate the debts, as Alexander Hamilton did when he formed the U.S. government, he took all the state debts, assumed them, that became federal debt, and that started it, okay? So in the U.S., what are bank reserves? Only federal debt, not Louisiana, Mississippi, California, New York, or whatever, because every one is different according to its credit rating. In Europe, they didn't do that because they were just desperate to try and get a single currency. They felt that if they also consolidated the debts, that the people wouldn't have voted for it. So they told me at that point, we understand. We're going to do the currency first, and then we'll do the bonds second. Well, then the problem happens is that crew that I met with back then, they leave. The next one comes in, and it's like, what happened to phase two? What are you talking about? We never heard of it. So you have the ECB going negative, whatever. They're not addressing the problem. The euro could never match the dollar, never. And this is why the dollar just keeps going up. If you are an insurance company, whatever, and let's say you got $1 trillion, okay, and you want to park it someplace, the U.S. dollar is the only place you can. In Europe, you can't buy euro bonds, okay? You have to buy Swiss, or you have to buy, Spain or Greece or Germany or whatever. So what happens is everyone has a different credit rating. So you look at Germany, the bonds are going outrageous. I mean, they're like 100 and more than 130 basis points, beyond U.S. rates. Because why? Because it's capital internally within Europe saying, well, the euro is going to go. I'd rather have German bonds because if it goes, I'll end up with Deutschmarks. So the euro could never compete with the dollar. There's no place to park $5 trillion. And, it's people, in the United States say, oh, we got a debt of 18 trillion. Well, the total world debt's about 150 trillion. All right. So 18 is not really that bad. But at the same time, the real issue is that because we do at least have that much, you can park money in there somewhere. So the dollar is a reserve currency. And because all the central banks have to park money, their foreign reserves in something. Now, they've been trying to diversify to some degree, but a lot of these other markets can't handle that big size. You're talking about Australia, Canada, Britain, etc. So it's far more complex than just looking at the superficial numbers.
But I wanted to get back to one point you brought up, is that there's no retailer in the U.S. stock market. I look at some of the U.S. Citizens, 1/3 don't even have $10,000 in the bank. To me, I think CNBC, their ratings have tanked. I think one of the reasons is Americans are too broke to own stocks right now. 2/3 are living paycheck to paycheck. Do you think that plays a factor into why the retailer isn't in the stock market right now?
It most likely contributes to it, but after 2007, they haven't come back. And liquidity in the market is still about 50% of what it was in 2007. So they got burnt on the dot-coms. They got burnt on in 2007. They're not, the retail isn't, so anxious to run back into the market at this place. Plus, we have nothing but escalating taxes. And it's the biggest problem we have is that it's very nice. Government constantly stands up and say, oh, the rich, the 1%, whatever. Okay, go ahead and tax them. Does it ever lower everybody else's taxes? No. It just puts more money in their pocket. That's it. Our problem is it's just a lot of propaganda. And government basically, they couldn't manage a bubblegum machine store. They borrow year after year after year, and there's no intention of paying anything back. And you talk to them about it, and they go, I said, could you live this way? Oh, but, we're the government, we're different. So what they don't realize is it's not really this rich 1%, so per se. You just go to any Barnes and Noble or whatever and get one of the almanacs, and we'll have a list of the national debt from every year, and it has a breakdown in it, and it will say how much they paid in interest. Add it up. You'll see 70% of the entire U.S. national debt is the cumulative interest. So it didn't go to help the poor, didn't help to build roads or schools or make anybody's life better. It went to interest. And then 40% of the interest goes overseas. So, how do you think China rebounded so quickly? All right. How did Japan rebound so quickly? Everybody's making a fortune off of interest. Why? Because we perpetually borrow. It's just crazy, but those who've been in the industry for a long time will know. There's something that has changed. In the 60s, if you had a government bond and you went to the bank and you said, gee, I want to borrow some money against this, I don't want to sell the bonds, I just want to borrow. Sorry, they couldn't lend. It was illegal to lend on U.S. government bonds. Then 1971 came with the beginning of the floating exchange rate. Okay? Now all of a sudden, bonds became the new thing, and you could borrow against them. So if you want to trade futures, what do? You put your money in T-bills and you post the T-bills as collateral. You could never do that before. So the old adage that, gee, it's less inflationary to borrow because you're not printing the money is total nonsense. We now, basically the bonds are used as cash, as collateral, whatever. So we're just printing money that pays interest now. They're totally fungible. So there's no distinction.
Yeah, that's true. When I look at like balance sheets of companies, they don't report cash holdings now. They do cash and cash equivalent. And a lot of these companies have bonds on their cash, and they count them as cash on their balance sheets.
You don't trust the banks, so what do? You hold treasury notes.
Yeah.
And as long as you can put them in repo and borrow that night, sell them, whatever, it doesn't matter. It's just cash that pays interest.
Yeah. Well, I also wanted to get the one thing. You talked about propaganda or corruption. What do you think about right now? This was a little bit of whiles ago, but it's not too long ago. But like Rupert said that we had to intentionally mislead the people to get Obamacare passed. You look at Hillary and her emails. It's just unbelievable how open this corruption is, in my opinion.
Well, honestly, I've known a lot of politicians and worked with a lot of governments around the world. And the only one that ever surprised me was actually when I was the one that was called in by China. So I met with the central bank and everything during the Asian currency crisis back in the 90s. And I was very surprised that they called me rather than just an academic. But the bank was run by traders. Everybody had actual experience. So that's why China has done very well. When I came back and the U.S. Treasury called me and said, gee, what was it like, to actually meet with them? What would you see? I said, very unique policy. I said, they only hire people with experience. So, but this propaganda stuff it is basically really complacent. They know that whatever scandal hits the press, all right, people forget about it within like 30 to 90 days. So they have to answer it. Oh yeah, okay, fine. Do you think Hillary will not run because of that? Hillary, of course, she'll run. And it's outrageous what she did, but that's the way it is. And the same thing you've got with Republicans, whatever. But I can tell you, even with our, this movie that they did, every country signed up but the United States. And only when the United States was like, people were saying, how come Americans can't see this movie? It's largely because they don't want anybody to see it. And finally somebody stepped up and said, no, we will do it. But I met with people from Hollywood, and they said, this is really a great movie. But they said, they're afraid of the banks and they're afraid of government. he says, well, we have kind of what you call self-censorship. I said, what is that? He said, well, we're just not going to do something that we know is going to piss somebody else off.
Well, speaking of banks and government, we know it's obvious that they're sort of one. In my opinion, in 2008, that's what the banks did. You don't bail us out, it's going to come back to haunt you, and everything's going to be horrible. So, banks and government, I think, at least in the United States, probably everywhere, is one, like the TARP or the stress test or.
Well, it's more in the United States because we have what is called primary dealers. And that developed because the United States actually paid off its national debt. We didn't have one until the Civil War. Because we didn't have one, then the Treasury didn't know how to sell bonds. So they went basically to Jay Cooke in Philadelphia, who was often called the P.T. Barnum of finance back then. He was using the railroads to distribute brochures and bonds and developed a very nice network to sell private bonds. Mm-hmm. So the federal government went to him and said, gee, could you sell our bonds? And so he did. So that precedent followed. So what happens is that the Treasury never sold debt to the public directly. They always went to a bank to do it for them. So then the banks have had tremendous power because they come back and say, hey, we're going to go down. Unless you bail us out, you can't sell your debt. So that's been the blackmail. And that's how they get, bailed out for unbelievable stuff. I mean, and, they try to manipulate things. But the problem with them is that they're not very good at it. And they don't have to be. They don't even have risk management, honestly. And you want to talk about propaganda. I mean, you have these banks that stand up and say, oh my God, we had a rogue trader who lost $8 billion. What board of directors doesn't know that some trader was using $8 billion in credit? If the board didn't know that, then the board should be fired. But how many banks have stood up and said, oh, rogue trader? That's their standard operational excuse. It means that basically the board was involved in it, and when they lose, they blame the trader. It's nonsense. You can't trade at those kind of levels. I mean, I've owned 2 brokerage houses, and I can tell you with Nielsen, with Daring Brothers crisis, when they came to us, they had accounts with us. I said, okay, fine, we'll do business with you. I want a letter from the board saying what his credit limit is. I got that letter. They didn't stick us. So what can I tell you? But everywhere else, it was a rogue trader. We had no idea. Total nonsense. He traded at our brokerage house in Hong Kong, and we had a letter from the board of directors authorizing him to do so.
Well, also, speaking about corruption, I've read recently that you're forecasting a rise of a third party soon. Is that correct?
Yes. Our computer's been... You should realize that this is a computer that does this. We've basically put in absolutely everything possible that moves in the world, from nature to economics to currencies to whatever, and political trends. And our computer has been forecasting that 2016 would be the rise of a third party. And you can go on our site and you'll see charts, and you'll see there were major spikes in third party activity before, like early 1900s. You had Teddy Roosevelt split from the Republicans, created the Progressive Party. There was actually a very large third party spike during the Great Depression. And so that's coming back. And I just posted on our site this morning, for example, that Bonner has completely circumvented all the fiscal conservative Republicans. He's now, the Democrats are actually supporting Bonner. to make sure he doesn't get overthrown by the fiscal conservative Republicans. So this is crazy. And then he's cutting deals with them to increase spending of $10 billion for entitlements and stuff like this. And you had Glenn Beck just come out and said, that's it, he's no longer a Republican. This is serious stuff. I mean, I interview people from Capitol Hill directly on our site, and who've come out of the closet and willing to be, we do audio interviews and post them. A lot of the other ones I know, I go down to Capitol Hill often and meet, and it's just really completely off the wall. And I don't see any difference between the bulk of Republicans or Democrats. They know how to push people's buttons on social issues, gay rights and abortion and stuff like that. When it comes down to economics, they're all the same. It's maintain the status quo, and both sides, they just raise taxes. That's it. They never reform. And if you made Bonner say, okay, fine, I'll make you dictator for 30 days, what would he change? He wouldn't reduce the size of any agency.
Well, that's definitely true. Like in the debates in 2012, Rick Perry couldn't even name 3 organizations or departments he could shut down. No matter who's president, the debt keeps growing. The money printing keeps continuing. So in my opinion, it continues no matter what. They both use sort of the same economics.
That's what this third party's about. And I think there's a lot of people just saying, hey, what's going on here? This is enough. And the standard of living is declining. And the bottom line is this, is that, they're always after more taxes. I was down in Australia. They passed a luxury tax. Sounded great. Their slogan was, we're going to tax their fur coats, their Ferraris, and their French wines. They always make it sound like it's some super rich that they're after. Everybody cheered, yeah, go get them, okay, they passed it. What was in it? All electrical products. So, and everybody's like, oh, they get them to vote to increase their taxes on themselves all the time. You had Joe Biden in the last election in his debate saying, oh, the Republicans are for the super rich. Not just rich, super rich. So he tries to create the image that you're talking about Warren Buffett. All right? Who's the super rich? It's household income of $250. All right? Household income. So that's you, your wife, all right? And I'm telling you what's coming down the road. If you got 2 kids at home and they're living there, that's household income. That's what they're going to do. Obamacare, come on, it was a joke, complete joke. When they say, oh, the Republicans, want to throw out these, 3 million people to defend, it would have been cheaper just to give them Medicare. All right? And we should have. All right? This is just complete nonsense. When I lived in London, my mother fell down, hurt her elbow. Went to the hospital. They took care of her, no problem. What is Obamacare really about? It's about that the hospitals don't want to have to provide anything for free. So everybody I know, their bills went through the ceiling. Mine practically doubled. I ended up losing my insurance. I had to get something else, and they said, oh, you're not covered for maternity leave. I said, maternity leave, it's everybody I know ended up paying more. And it did not go to pay for these 3 million people that didn't have insurance. It went to pay for the hospitals who don't want to provide anything for free to anybody. That's what this is all about. And in Europe, if you're an American, you fall down or whatever, did they say, oh, sorry, you're American, die. That's what it's coming to here. If you're a foreigner, I mean, and try and get health insurance to travel to the United States, most companies will not even write it anymore. So it's not about the poor. I mean, I have no, fine. Everybody should be covered. I got no problem with that. All right, but we got plenty of programs to do that. Put the 3 million, fine. Put them on Medicare. What's the problem? Why do you have to change 300 million people for 3? There's always something else going on.
Yeah. Well, in my opinion, it's probably more about control than anything else. That's my opinion. In fact, one thing that I found pretty funny is that Buffalo Wild Wings, two of them in Texas, are now actually adding onto their bill a Affordable Care Act cost to their bill, so they can see how much costs are rising.
Well, I'll tell you, you can book flights, interestingly, on Expedia. We have offices around the world, so they will show you the difference on the tax on an airline ticket. We have people coming from Europe over to here. The ticket, $320. The tax, $375. In the United States, we have a law. The airlines are not allowed to tell you how much of that ticket price is tax. And you talk about fraud. If you miss the flight or whatever, you automatically lose it. Well, can I get at least refunded the tax? That would be at least 50% of the ticket.
Oh, yeah.
They're pocketing that too.
So, my next topic I just wanted to get into is that you're showing a global debt crisis coming in October. Am I correct?
Well, that's when it begins. It doesn't really end until probably about 2020. But most of Europe is really a basket case. You have France on the verge of really going down. Spain, Italy, Greece. I mean, they're pushing to the point that Greece ought to probably just leave the euro. And we have the same problems here. I mean, it's at we have a solutions conference we're actually going to do next weekend, which people can look at it will be live streamed on the internet. But at the municipal level in the United States, just look at it from a common sense standpoint. Let's say a small town had 20 cops and half retire. Now they still have to pay them. All right. Now they have to hire 10 more. So the cost of government is rising exponentially. And the way these governments have operated, they're unfunded on their pensions. Why? Because they assume that there would always be a supply of schmucks to tax. What happens when that supply of schmucks aren't there? Then everything starts imploding. And that's what we're seeing. We're seeing a lot more municipalities starting to get in trouble. Detroit, why did Detroit go down? Because basically more than almost 60% of its expenditures went to people in retirement. So you couldn't even fund a current government.
Yeah, not only that, I was going to bring up also is the birth rate. That's at all-time lows since keeping records, so it makes sense. There's just less and less people. So demographically in the West, it doesn't look too bright at all.
It's not just the West. You have it in Japan.
Japan.
Japan, they're calling it the celibacy syndrome. They're not even dating. And Putin in Russia, he's offering women like $3,000 to please have kids. So this is part of the problem, and we have some young girls in their 20s that work for us, and basically their attitude is no, they don't want the kids. Why? The world is too uncertain, and they don't want to bring anybody into it. So it's clearly also economically driven, and people don't realize how dangerous the socialism that of the New Deal actually has emerged. It's not that you don't want to help somebody. It's the fact that what they did was, before the New Deal, fine, you had, a few kids, and your children were basically your way for retirement. They took care of the parents. That was the traditional thing for thousands of years. Then comes the New Deal. And so now the younger generation ask them, gee, are you saving money to support your parents? No, that's government's job. They have, government replaced the family unit. And that's one of the huge problems. They're seeing that in China now. They've had to not only rescind the one-child rule, they now are imposing fines and penalties because the one child they had was a boy if they do not go back and visit their parents. So things have, this whole Marxist socialist idea has changed the family structure. And forget taxes and everything else. It's a very serious problem.
Oh, yeah. Not only that, Japan, one thing I read that was just astonishing is two things. One is baby diapers are being outsold by adult diapers, and there's more deaths than births now, which is unbelievable. It just shows a dying population. So I personally think Japan might be the first one to go. Do you see the
economically, Europe is far worse. Japan, the difference between the two is 70% of the debt of Japan is owned by the central bank, and the Japanese have had currency controls for a long time, so nobody could issue a bond in yen without the permission of the government, and so that's why the Japanese economy became the second largest in the world until China came along. But the yen could never rise to that level of being a reserve currency because of those controls.
So my last topic I want to get into is just is a favorite of ours. It's gold. Where do you see it going? What do you think it has on the horizon?
Gold is still more or less it's fallen out of favor right now, and that's typical with the particular cycle. And gold should probably dive down to under 1,000. It has really two support levels, like 875 to about 930 area. If it really goes beyond that, then the maximum is probably around 650 to 700. But you would get that type of spike low, and after that, then it would start to rise, but not until after our economic confidence model turns at around October 1st. Gold is not a hedge against inflation. I mean, if you looked at gold at 875 in 1980 and the Dow at 1,000, I think you would have been far better off with the stock market than you would have, $1,000 in gold. But what is gold? Gold is really a hedge against government, not inflation. So its biggest rallies take place when confidence in government declines. It has nothing to do with inflation. It's got nothing to do with whether there's gold in Fort Knox or anything like that. All that tends to be a lot of propaganda. But it's very nice for people to argue that. Prove it. You're never going to prove that there's no gold in Fort Knox or there's more than there should be. They're not going to let you in. So it's irrelevant. But gold has been largely the hedge against government per se. That's its biggest rallies historically, is when you don't know if government's going to survive. And that's what we start to move into when you're seeing the sovereign debt crisis and things of that nature. So you have to understand what makes gold go up. It's not inflation. And there are times to buy and there's times to sell. So it usually has to go to an extreme on both sides. And when it reaches that extreme, then it reverses.
All right. I just want to say thank you for your time. It was a pleasure talking to you. If people want to find out more about you, how can they do so?
They can just go to our website. It's armstrongeconomics.com.
Thank you, and we look forward to having you back on in the future.
Well, thank you for inviting me.